What's going on, everybody? It's Rod with Pow Group. Welcome back on the Pursuit of Wealth. Today is Friday. Happy Friday, March 28th. Hope you're doing well. And hope you have a great weekend ahead. In this video, we're going to take another look at Virgin Galactic stock. We're going to take a look at the chart, price action. I'll give my thoughts and opinions on what to expect in terms of that in the days, weeks, months ahead. But as always, not financial advice. This is for entertainment purposes only. And we're going to be discussing where is the bottom. Obviously, we don't have a crystal ball, and it's almost impossible to time the bottom. But we're going to take a look at the bearish continuation pattern and monthly bear flag, which we discussed in our last video. And we also discussed in the previous video, I believe it was the last week, that I bought for the first time. I did buy it again, but again, never buy or sell anything based on anything that I say. And yeah, we were looking at a daily inverse head and shoulders as well. That has since been negated. So we'll discuss all of that and more. Before we do, make sure to smash the like. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. And you can follow us over on X as well, formerly Twitter. Handle for that is @GroupPow. And again, full disclosure, I do own SPCE stock. I added it for the second time ever today. I started my first position last week, and I mentioned if it got closer to around $3, I would look to add again. And today we actually dipped below $3. So if we get to somewhere around, 275, maybe I'll wait till 250. We do have a bear flag target of 238. So I posted about this on X earlier today. I said just added a second position on a SPCE stock at $3. We negated the daily inverse head and shoulders, IHS. Now we watch for support at all-time low at 285, and then the monthly bear flag target of 238. And then it's possibly a monthly inverse head and shoulders as well. So we were looking at that on the daily time frame. And if we just bring up that chart that I posted earlier today, it's taking a little bit of a time to load here. It's been slow today on TradingView, but we'll just go over. I have it open here, so it's all good. So we were looking at this daily inverse head and shoulders here. And I mentioned that we had the left shoulder there at $4. If we lose $4, that wasn't going to be a good sign. And I mentioned on this big bounce, we had yet to change the daily trend. So the move on all the way down at 285, and we did have a reverse split, right? So it did a 1 for 20 reverse split. So the low there at 285 to the high of the bounce at 444, that was a solid bounce, right? In terms of percentage wise, we jumped about almost 56%. But the problem with this is we had no support, and we had yet to change the daily trend. We were no longer in a daily downtrend with the break of the lower high, lower low pattern, but we were looking at more than likely a top out here at the neckline, and then the potential for an inverse head and shoulders. Again, it was just the potential. We didn't actually confirm it, and it's all about support and resistance. So we had support at $4, and then I mentioned as long as we hold a 0.382 fib, it's fine if we dip a little bit below $4, but generally on an inverse head and shoulders, the right shoulder gives you the daily uptrend, or whichever time frame you're on. We'll look at the monthly in just a moment, but when the monthly tops out at the head at the neckline and then it forms of the right shoulder, that's generally the monthly high or low forming and then the monthly uptrend confirming. So the right shoulder is just the uptrend that you're looking for, and then once it confirms the uptrend, that confirms the inverse head and shoulders. And IHS is inverse head and shoulders. IHS is just a bullish reversal pattern. So some people were looking at this saying it was a cup and handle. That doesn't really make sense. A cup and handle's at the top of an uptrend, and it's a continuation pattern in a bull trend. An IHS is a reversal pattern that you usually find at the end of a bear trend. So what were we in? We were in a downtrend, means we were in a bear trend. So you're looking at an inverse head and shoulders, right? So we were looking at that key support to hold at 383. Why? Because that was the daily, the 0.382 fib. When I say Fibonacci levels, the 0.382 fib, it just means 38%. If you pull back to the 0.382 fib, essentially you've given back about 38% of that move. If you retrace to the 0.5% retracement, that's about 50% of the move given back. And then the golden ratio there in the 0.618 to the 0.786, that means you've given back about 61 or 78% of the move, right? And at this point, we've given back almost 100%. So this is what happens when you have no support. It's generally a mountain pattern, right? Elevator up, elevator down. That's exactly what we saw. It took about the same amount of time to go up as it did to go down. And that's because we didn't have that support. Would have been different if we had a higher low and then a higher high, a higher low and higher high. And an example of that would be SPY. So let's take a look at the S&P 500. So you can see here, whoops, we have our low, high, higher low, and higher high. And we had support there, but it was a bit of a red flag here because we had our support there at 559. A couple days later, a few days later, we dropped to 558. So we lost that support. And then today we ended up getting that flush. And in my opinion, this is just a bear trap. I think we're going to be just fine. I think next week we'll probably go sideways and then maybe see one more final flush and then a reversal and then a bull cross of those EMAs on the 12 and 26 period. But like I said, if we had those support levels established along the way, then it doesn't mean, we're out of the woods, and, it just means that we have a lot more support if something were to, if we were to pull back, right? Whereas if you just go straight up, it's usually marked with mountain pattern straight back down. So that is the concept there. If you're looking at the daily time frame here and the IHS, we needed to hold the 0.382 fib, and then if you lose that, then it's no longer a daily bull flag, and then you're looking at an equilibrium, and you're probably looking at some sort of tightening range, if not even worse, because we hadn't confirmed the daily uptrend, right? So we were just looking for a daily high or low, and then, like I mentioned, the S&P 500 was weak, so that added to the sell-off, right? That's headwinds as opposed to the broader market being strong and getting tailwinds from the rest of the market. So now we can do away with the inverse head and shoulders. We're not looking at that on the daily time frame, but if we zoom out to the monthly, it is very much possible that we see a monthly inverse head and shoulders. So let's just say our bottom is in at 285 and we start the monthly bounce next month, which very well could happen because we've only got a couple days left. Like Monday's the last day of the month. So if we do start next month with a monthly inside bar, which it's looking like, and then we start the bounce next month. In order to start the bounce next month, we would have to break the high of this month at 444, start the bounce, and then we can look at a bounce up to around $8.19, which would be the neckline. And then this could potentially give us our inverse head and shoulders on the monthly, and then we could form a right shoulder there somewhere around 527. But again, if we do come up, test the neckline, and then form a higher low, that would be our monthly higher low, and then we would need the higher high to be in a monthly uptrend. That would be huge. That would be a very bold statement and major momentum shift back to the bulls. And then, like I said, we would see the monthly uptrend and IHS confirm all at the same time. And then you just take your measure move there from the low to the high, move it out to your 0.382 fib, assuming this is our low, right? We could easily trend lower from here. But assuming that is our low and we were to confirm a monthly uptrend and the IHS, we'd be looking at a move up to around $23, which is also basically half of these, right in the middle of those EMAs, the monthly EMA 12 and 26. And generally what happens with these EMAs is we get extended upside to the upside, we come back, test it as support, we test it as resistance, failed, broke down, and now we're going to come back up and test it as resistance again. If we were to just test EMA 12 on the monthly, that'd bring us up to around $12.75. So that's what we'll be looking for. It's possible that we see another leg down, though. We're still very weak, the S&P 500. So we'll be looking at the broader market at this point. We'll be looking to see how the rest of the market, the broader market, is holding up. If the S&P 500 continues to see weakness into next week, then we have our monthly bear flag target of 238. So you just take your fib tool here from the high to the low, and then we had a very weak bounce here. And then once we lost support there at 527, that confirmed the monthly bear flag. Then you just take your measured move there from the high to the low, move it out to your 0.382 fib, and it's saying that that target is 238. So like I said, 285 is major support now in the near term. And then if we lose that, we're looking at 238, and that would be a new all-time low. So that's how you can develop support and establish support levels, even though it's a new all-time low and we haven't seen price discovery in that range before. So that's why I like using these different bear flags and bull flags and pattern signals indicators so that we can get an idea. And you can do the same thing too on the upside when you're breaking into new all-time highs. There's ways to kind of determine where we could potentially end up, right, using Fibonacci extension, etc. But if we take a look at the weekly time frame here, still not looking too bad. Again, we topped out right at that 10-week moving average. We do have a bull cross on the stochastic. MACD's basically flat, but not looking too bad. So if we can see 2, preferably 3 candle closes over that 10-week moving average, then I think we're going to be off to the races at that point. And then, like I said, there's a good chance that we end back around that $8, which is the monthly neckline as well. If you see here, it's 819. And then if we were to retrace back to our 50 weekly moving average, that's at 817. So I wouldn't be surprised at all if we were, I think there's a big move incoming. I think it could be, maybe a month or two away just based on this monthly chart. We would still have to start the monthly bounce, top out, form a higher low and then a higher high to be in a monthly uptrend. And then to potentially confirm this inverse head and shoulders. It could be, at this point, it could be, midsummer, maybe even into the fall. Before we see, back into double digits, $10, $20. But you have to remember the price is at $3, $3.01. It closed today, but it did a 1 for 20 reverse split. So you would divide that price by 20. The stock is technically at 15 cents today, right? But factoring in post reverse split, we closed at 301. On the daily time frame, we topped out right at the 50-day move in that moving average as well. So that was a major clue. And we're still a little ways away before we see that golden cross with the 50 below the 200. When those cross, that's called a golden cross, and generally major upside ensues. So we would expect those maybe to cross. They're still quite a ways away. You can see the 50s at 414 and the 200-day moving average is at 631. So I would say it's at least a month away before we see those cross bullish. Obviously, news can change that. But yeah, I'm getting a lot of requests to cover SPCE, so I'll be doing so. And like I said, I took my second position ever, but not financial advice. Never buy or sell anything based on what I do. But I do think that this is a great risk reward trade, right? Like I'm not going to invest any more than a couple thousand, maybe $3,000 at the most into this thing. But you don't need to break the bank on this, right? Again, I've been buying. This is my first and second buy ever today. So I'm able to take advantage of these lower prices and the risk versus reward, right? If you, let's say you invest $1,000, the most you can lose is $1,000. If this thing even goes back halfway to all-time highs, that's life-changing wealth, right? And with very little risk. So love these types of trade setups. It really does remind me of the Oxley trade that a lot of us took about probably getting on close to a year now. So it was at a penny and just hit almost 11 cents the other day. And I don't think it's going to stop anytime soon. But again, do your own research and don't follow my trades. And yeah, going to end it there. It's Rod with the Pow Group. Hope you have a fantastic rest of your day and a great weekend ahead. Thanks again for joining us on the Pursuit of Wealth, and we'll catch you on the next update.